Question 1. Which of the following is the primary goal of health maintenance organizations? HMOS A. To reduce administrative costs through high deductible plans. B. To provide healthcare with a focus on preventative services and lower cost care. C. To cover a broad network of out-of-network providers at a higher cost. D. To eliminate premiums for individuals who meet certain health criteria. Answer B. Explanation. The primary goal of health maintenance organizations, HMOS, is to provide healthcare with a focus on preventative services and lower-cost care. HMOS achieve this by requiring members to use a network of doctors and hospitals and emphasizing preventative care to reduce long-term healthcare costs. HMOS typically cover most medical expenses when services are provided within the network and often encourage regular checkups, screenings, and health management to avoid more expensive treatments later. Options A, C, and D are incorrect because they do not align with the primary goals of HMOS, which emphasize cost control, preventative care, and network management. Question 2. Mr. Davis has recently been diagnosed with a pre-existing condition and is applying for an individual health insurance policy under the Affordable Care Act account. Which of the following will most likely apply to his case? A. His pre-existing condition can be used to deny his application. B. He must wait for a special enrollment period to apply for coverage. C. He will be eligible for coverage, but with higher premiums due to his pre-existing condition. D. His pre-existing condition must be covered immediately without any waiting period. Answer D. Explanation. Under the Affordable Care Act, health insurers are prohibited from denying coverage based on pre-existing conditions. This means that Mr. Davis cannot be denied health insurance due to his diagnosis, and his condition must be covered without imposing waiting periods or exclusions related to it. Additionally, the care regulations ensure that all health plans provide coverage for pre-existing conditions without charging higher premiums based on health status. Option is incorrect because under the account, pre-existing conditions cannot be a reason for denial. Option B is incorrect because while special enrollment periods exist, the account mandates continuous enrollment without discrimination due to pre-existing conditions. Option C is incorrect because account rules prohibit charging higher premiums for individuals with pre-existing conditions. Question 3, scenario-based. Mrs. Thompson recently left her job at a company that provided her with group health insurance. She now needs to secure health coverage. What should Mrs. Thompson do to ensure that she does not face a gap in coverage? A. She should wait until the next open enrollment period to apply for health insurance through the health insurance marketplace. B. She should apply for coverage through COBRA to continue her existing employer-provided coverage. C. She should immediately cancel her old health insurance and apply for a new individual plan through the marketplace. D. She should apply for Medicaid if her income qualifies without considering other options. Answer B. Explanation. Mrs. Thompson should apply for coverage through COBRA to continue her existing employer-provided health insurance for a limited time. Under COBRA, she has the option to continue her group health insurance coverage for up to 18 months after leaving her job, although she will be responsible for the full premium cost. This helps prevent a gap in coverage while she explores other options such as applying for a marketplace plan. Option is incorrect because waiting for the next open enrollment period could lead to a gap in coverage. Option C is incorrect because cancelling her old health insurance before securing new coverage could result in an uninsured period. Option D is incorrect because applying for Medicaid may not be necessary unless Mrs. Thompson's income qualifies her and other options like COBRA are available to her. Question 4. Which of the following is a key difference between health maintenance organizations, HMOS, and preferred provider organizations, PPOS? A. PPOS require members to choose a primary care physician, PCP, for referrals. B. HMOS have a broader network of healthcare providers and allow out-of-network coverage at a higher cost. C. PPOS emphasize preventative care and disease management more than HMOS. D. HMOS provide coverage only for in-network services, while PPOS allow more flexibility with out-of-network providers. Answer D. Explanation. HMOS require members to receive care from network providers, and any out-of-network care is generally not covered except in emergencies. In contrast, PPOS provide more flexibility, allowing members to see out-of-network providers at a higher cost. PPOS don't require primary care physician, PCP, or referrals, making them more flexible than HMOS. Option is incorrect because it describes a HMO feature Option B is incorrect because PPOS, not HMOS, offer broader network with out-of-network options at higher cost. Option C is incorrect because PPOS do not emphasize preventative care more than HMOS, but both plans emphasize different aspects of care management. Question 5. Which of the following is an example of a coordination of benefits (COB) situation in health insurance? A policyholder with both Medicare and a private insurance plan receives care and the plans coordinate payment to avoid double payment. B. A policyholder with an HMO is referred to a specialist without needing pre-authorization. C. A policyholder receives benefits for preventive services like vaccinations under their health insurance policy. D. A policyholder with a high deductible HELP AHP applies for an HSA to pay for medical expenses. Answer A. Explanation. Coordination of benefits (COB) occurs when a policyholder is covered by more than one insurance policy. G. Medicare and private insurance and the insurers work together to determine the amount each will pay to avoid paying the full amount for the same service. This ensures that the total payment does not exceed the actual cost of the healthcare. Option B is incorrect because a referral to a specialist within an HMO is a network management process not related to COB. Option C is incorrect because coverage for preventive services like vaccinations is not related to COB. It is part of standard health insurance coverage. Option D is incorrect because HSAs are linked to HSA but are not part of COB processes. Question 6. Scenario-based. Mr. Johnson has been working with his health insurance agent to purchase a new individual health plan through the marketplace. During the enrollment process, he is unsure whether his prescription medications will be covered. What should Mr. Johnson do to ensure that his medications are covered? A. He should assume that all medications are covered, as the marketplace mandates drug coverage for all policies. B. He should ask the agent to provide a list of covered medications or consult the plan's formulary to check if his medications are included. C. He should wait until he needs the medications and then appeal to the insurer if they are not covered. D. He should choose a plan that does not include prescription drug coverage to lower his premiums. Answer B. Explanation. The correct approach is for Mr. Johnson to ask the agent for a list of covered medications, also called the formulary, or consult the specific plan's formulary to check if his medications are included. Health plans offered through the marketplace often have formularies that specify which drugs are covered, and coverage can vary by plan. Option is incorrect because the marketplace does not mandate universal drug coverage across all policies. Option C is incorrect because waiting until medications are needed is not a proactive approach and drug coverage issues should be addressed during enrollment. Option D is incorrect because opting out of prescription drug coverage might lead to significant out-of-pocket costs for medications. Question 7. Under the Health Insurance Portability and Accountability Act, HIPAA, which of the following is true regarding the privacy and security of a patient's medical information? A. HIPAA allows health insurers to share patients' medical information freely with family members without written consent. B. HIPAA mandates that all healthcare providers, insurers, and clearinghouses must implement safeguards to protect the confidentiality of health information. C. HIPAA requires patients to disclose all medical conditions to their insurance provider before applying for coverage. D. HIPAA allows insurance companies to deny coverage based on patients' pre-existing condition as long as they notify the patient. Answer B. Explanation. HIPAA mandates that healthcare providers, insurers, and other covered entities must implement specific safeguards to protect the privacy and security of an individual's health information. These safeguards include physical, technical, and administrative measures to ensure that patient data is kept confidential. Option is incorrect because HIPAA limits the sharing of medical information and generally requires patient consent, even for sharing with family members. Option C is incorrect because HIPAA does not require patients to disclose all medical conditions to insurance providers prior to applying for coverage. Option D is incorrect because HIPAA does not allow insurers to deny coverage based on pre-existing conditions. This is prohibited under the Affordable Care Act. Question 8. Which of the following best describes the role of the North Dakota Insurance Department (NDID) in health insurance regulation? A. The NDID provides health insurance coverage to eligible residents who cannot afford private insurance. B. The NDID oversees and enforces state-specific health insurance laws, consumer protections, and compliance with state health programs. C. The NDID only regulates Medicaid and does not oversee other types of health insurance in North Dakota. D. The NDID is responsible for directly approving or denying health insurance claims on behalf of consumers. Answer B. Explanation. The North Dakota Insurance Department (NDID) oversees and enforces state-specific health insurance laws, consumer protections, and ensures compliance with state health programs such as Medicaid and the Children's Health Insurance Program (CHIP). The NDID works to ensure that insurers operate fairly and comply with North Dakota's laws. Option is incorrect because providing insurance coverage is not the NDID's role. It regulates and oversees the industry. Option C is incorrect because the NDID regulates various types of health insurance, not just Medicaid. Option D is incorrect because the NDID does not directly process or deny insurance claims. It oversees the regulatory environment for insurance practices. Question 9. What is the primary benefit of using a health savings account (HSA) in conjunction with a high deductible health per AHPA? It allows individuals to deduct the cost of their monthly premiums from their taxable income. B. It allows individuals to use pre-tax dollars to pay for qualified medical expenses, reducing their overall taxable income. C. It provides a tax-free source of income for individuals once they reach the age of 65. D. It guarantees coverage for all healthcare services, including dental and vision care. Answer B. Explanation. The primary benefit of an HSA in conjunction with an HHP is that it allows individuals to contribute pre-tax dollars to pay for qualified medical expenses. These contributions reduce the individual's taxable income, providing significant tax benefits. Additionally, the money in the HSA can grow tax-free and be used for eligible medical expenses. Option is incorrect because HSA funds are not used to deduct premiums. They are for medical expenses. Option C is incorrect because HSAs do not provide income. They are a savings account for medical expenses, though funds can be withdrawn tax-free after age 65 for non-medical purposes. Option D is incorrect because an HSA does not guarantee coverage for all healthcare services. It only helps with out-of-pocket medical expenses. Question 10. Which of the following is a key feature of a preferred provider organization (PPO) plan? A POPN requires members to select a primary care physician (PCP) for referrals to specialists. B. A POPN offers flexibility in choosing healthcare providers, including out-of-network providers, at a higher cost. C. A POPN only covers healthcare services provided by a network of providers with no out-of-network coverage. D. A POPN mandates that members receive approval from the insurance company before seeking any medical care. Answer B. Explanation. A POPN offers flexibility by allowing members to choose healthcare providers within or outside the network. Although out-of-network services are generally covered at a higher cost, PPOS do not require a primary care physician (PCP) or referrals to see specialists, giving members more autonomy in managing their healthcare. Option is incorrect because POS do not require members to select their E for referrals. Option C is incorrect because POS do allow out-of-network care, albeit at a higher cost. Option D is incorrect because PPOS do not require pre-authorization for most medical services. Question 11. Which of the following is not a requirement for an insurance policy to qualify as a qualified health plan under the Affordable Care Act? A. The plan must cover essential health benefits. B. The plan must cover pre-existing conditions without exclusion. C. The plan must cover all medical expenses, including those related to cosmetic surgery. D. The plan must provide coverage for preventive services without cost sharing. Answer C. Explanation. Qualified health plans under the account must cover essential health benefits, pre-existing conditions, and preventive services without cost sharing. However, they are not required to cover cosmetic surgery unless it is medically necessary. Option is correct because coverage for essential health benefits is a key requirement of qualified health plans. Option B is correct because the account prohibits the denial of coverage for pre-existing conditions. Option D is correct because preventive services must be covered with no cost sharing under the account. Question 12. Which of the following types of insurance policies are most likely to be subject to state-level regulation in the U.S.? A. Life insurance policies sold by national banks. B. Health insurance policies sold by self-insured employers. C. Property and casualty insurance policies sold by national insurers. D. Health insurance policies sold by state Medicaid programs. Answer C. Explanation. Property and casualty insurance policies sold by insurers that operate in multiple states are subject to state-level regulation. Each state has its own regulations regarding underwriting, claims, and licensing. Option is incorrect because life insurance sold by national banks may be federally regulated. Option B is incorrect because self-insured employer health plans are subject to federal regulation under ERISA. Option D is incorrect because Medicaid is a state and federal joint program, but health insurance policies through Medicaid are primarily governed by state rules. Question 13, scenario-based. Sarah is 65 years old and currently covered by both Medicare and a private health insurance plan through her employer. If Sarah receives medical treatment, how will the coordination of benefits work in this situation? A. Medicare will pay first and the private insurance plan will pay second. B. The private insurance plan will pay first and Medicare will pay second. C. Medicare will pay the entire bill and Sarah's private insurance plan will not contribute. D. Both Medicare and the private insurance plan will pay equally, splitting the cost. Answer. Explanation. For individuals eligible for both Medicare and a private health plan, Medicare generally pays first as the primary payer and the private insurance plan pays second as the secondary payer. The secondary insurance may cover additional costs, but it does not duplicate what Medicare already covers. Option B is incorrect because Medicare typically pays first when both Medicare and private insurance are involved. Option C is incorrect because Medicare and private insurance both provide coverage, with the private plan acting as secondary insurance. Option D is incorrect because the costs are not typically split equally. Question 14. Which of the following is a key provision of the Health Insurance Portability and Accountability Act, HIPAA A? It allows healthcare providers to share patient data with third parties without patient consent. B. It requires healthcare organizations to implement privacy and security measures to protect patient data. C. It mandates that all individuals are entitled to free healthcare coverage. D. It allows insurance companies to use genetic information to deny coverage. Answer. B. Explanation. HIPAA mandates that healthcare providers, insurers, and other healthcare entities implement safeguards to ensure the privacy and security of patient information. This includes both physical and electronic safeguards. Option is incorrect because HIPAA restricts the sharing of patient data and generally requires patient consent for disclosures. Option C is incorrect because HIPAA does not mandate free healthcare coverage. Option D is incorrect because HIPAA restricts the use of genetic information in insurance practices. Question 15. Which of the following is an example of an indemnity insurance plan? A. A peer health insurance plan where members can visit any healthcare provider. B. A health insurance plan where the insurer pays a set amount for each covered service and the insured pays the rest. C. A health insurance plan where the insurer provides 100% coverage after the deductible is met. D. A health insurance plan that reimburses the policyholder for actual expenses incurred up to a policy limit. Answer. D. Explanation. An indemnity insurance plan reimburses the policyholder for the actual expenses incurred up to the policy's limits. These plans typically offer more flexibility in choosing healthcare providers. Option is incorrect because PPO is not indemnity insurance. It's managed care plan. Option B is incorrect because it describes plan with set copay or coinsurance structure, not an indemnity plan. Option C is incorrect because this describes comprehensive or full coverage health plan, which is different from indemnity insurance. Question 16. Which of the following is a characteristic of the Affordable Care Act health insurance marketplaces? A. They allow consumers to only purchase health plans from federally operated exchanges. B. They offer a single-tier pricing structure with no subsidies available. C. They allow consumers to purchase qualified health plans with financial subsidies based on income. D. They do not provide any coverage options for people with pre-existing conditions. Answer. C. Explanation. The ACA health insurance marketplaces allow consumers to purchase qualified health plans, often with financial subsidies based on their income. These subsidies help lower the cost of coverage for eligible individuals and families. Option is incorrect because consumers can purchase health plans from both state and federally operated exchanges. Option B is incorrect because there is a sliding scale for subsidies based on income. Option D is incorrect because the ACA prohibits insurers from denying coverage based on pre-existing conditions. Question 17. In the context of health insurance, what is a deductible? A. The amount a policyholder must pay for each visit to a doctor or hospital. B. The amount a policyholder must pay for covered healthcare services before the insurance plan begins to pay. C. The percentage of healthcare expenses that a policyholder is required to pay after meeting the deductible. D. The maximum out-of-pocket expense that a policyholder can pay in a given year. Answer: B. Explanation. A deductible is the amount a policyholder must pay out of pocket for covered healthcare services before the insurance plan starts to pay. Once the deductible is met, the policyholder may be responsible for copies or coinsurance. Option is incorrect because this refers to copies or coinsurance, not the deductible. Option C is incorrect because this refers to coinsurance, not the deductible. Option D is incorrect because the maximum out-of-pocket expense is the out-of-pocket maximum, not the deductible. Question 18. Which of the following is typically covered under the medical payments portion of an auto insurance policy? A. Damages to your vehicle in the event of an accident. B. Injuries sustained by passengers in your vehicle regardless of who is at fault. C. Legal fees incurred during an accident dispute. D. Property damage to another driver's car. Answer: B. Explanation. Medical payments coverage in an auto insurance policy generally covers medical expenses for injuries sustained by passengers in the insured vehicle regardless of who was at fault for the accident. Option is incorrect because damage to the vehicle itself would be covered by collision or comprehensive insurance, not medical payments. Option C is incorrect because legal fees are typically covered by liability or personal injury protection, not medical payments. Option D is incorrect because property damage to another driver's car is covered under liability coverage, not medical payments. Question 19 scenario-based. John's auto insurance policy has deductible of $500 for collision coverage. He causes an accident and his vehicle incurs $1,500 in damage. How much will John pay out of pocket for the repairs? A. $1,500. B. $1,000. C. $500. D. $0. Answer: B. Explanation. John will pay the $500 deductible first and his insurer will cover the remaining $1,000 of the damage. Therefore, John will pay $500 out of pocket. Option is incorrect because John does not need to pay the entire $1,500, just the deductible. Option C is incorrect because the deductible is $500 and this is the portion John must pay before the insurer covers the rest. Option D is incorrect because John must pay the deductible even though his insurer will pay the remainder. Question 20. Which of the following is typically excluded from coverage under a standard homeowner's insurance policy? A. Damage caused by fire. B. Loss of personal property due to theft. C. Flood damage caused by rising water. D. Damage caused by vandalism. Answer: C. Explanation. Flood damage caused by rising water is typically excluded from standard homeowners insurance policies. Homeowners must purchase separate flood insurance to cover damage from floods. Option is incorrect because fire damage is generally covered under a standard homeowners policy. Option B is incorrect because theft of personal property is typically covered under standard homeowners insurance. Option D is incorrect because vandalism damage is typically covered under homeowners insurance policies. Question 21. Which of the following is a characteristic of an HMO health maintenance organization health insurance plan? A. It allows policyholders to see any specialist without a referral. B. It typically has lower premiums than PPO plans. C. It provides coverage for out-of-network care at a higher cost. D. It requires policyholders to pay a higher deductible before coverage begins. Answer: B. Explanation. HMO plans typically offer lower premiums than PPO plans because they restrict policyholders to a network of providers. To see specialists or obtain certain services, policyholders often need a referral from their primary care physician. Option is incorrect because an HMO generally requires referrals to see specialists. Option C is incorrect because HMO plans typically do not provide coverage for out-of-network care except in emergencies. Option D is incorrect because the deductible in an HMO plan is usually lower than in PPO plans, not higher. Question 22. Which of the following statements about term life insurance is true? A. Term life insurance covers the insured for their entire life as long as premiums are paid. B. Term life insurance does not build cash value. C. Term life insurance premiums tend to decrease as the insured gets older. D. Term life insurance policies always offer guaranteed renewal after the term ends. Answer: B. Explanation. Term life insurance provides coverage for a specific period and it does not build cash value over time, unlike whole life insurance. Option is incorrect because term life insurance provides coverage only for a set term, e.g., 10, 20, or 30 years, not for the insured's entire life. Option C is incorrect because term life insurance premiums generally increase as the insured ages, not decrease. Option D is incorrect because while some term life policies offer renewal options, they are not always guaranteed and may come with higher premiums. Question 23, scenario-based. Jennifer has a homeowner's insurance policy with a $1,000 deductible and $50,000 coverage for personal property. She experiences a fire that causes $15,000 worth of damage to her personal property. How much will Jennifer receive from her insurer after the deductible is applied? A. $14,000. B. $15,000. C. $50,000. D. $49,000. Answer A. Explanation. After applying the $1,000 deductible, Jennifer will receive $14,000 from her insurer, $15,000 in damages. $1,000 deductible. Option B is incorrect because the deductible must be subtracted from the claim amount. Option C is incorrect because the coverage limit of $50,000 exceeds the damage, but only $15,000 is at risk in this case. Option D is incorrect because the deductible is $1,000, not $49,000. Question 24. Which of the following is not typically covered by a standard auto insurance policy? A. Damage to the insured vehicle in a collision. B. Liability for damage to another person's vehicle. C. Medical payments for injuries to the insured and passengers. D. Damage caused by an earthquake. Answer D. Explanation. Damage caused by an earthquake is not typically covered under a standard auto insurance policy. Additional coverage, such as earthquake insurance, would be required for such a scenario. Option A is incorrect because collision damage to the insured vehicle is typically covered. Option B is incorrect because liability for damage to another person's vehicle is covered under liability insurance. Option C is incorrect because medical payments are usually covered for injuries to the insured and passengers in the vehicle. Question 25. Which of the following is true about insurance under the Federal Employees Compensation Act, FECA? It provides health benefits to federal employees only in the event of an accident at the workplace. B. It is the primary source of insurance for all federal employees, including retirees. C. It offers benefits to federal employees for work-related injuries, including medical care and disability compensation. D. It does not provide benefits for injuries that occur during non-work activities. Answer C. Explanation. FECA provides compensation to federal employees for work-related injuries and illnesses, covering medical care, rehabilitation, and disability benefits. Option is incorrect because FECA covers both accidents and illnesses related to employment, not just accidents. Option B is incorrect because FECA is only for current federal employees, not retirees. Option D is incorrect because FECA does not cover injuries or illnesses unrelated to work. Question 26. Which of the following is a characteristic of an umbrella insurance policy? A. It provides basic coverage for auto and home insurance claims. B. It supplements other insurance policies by providing extra liability coverage. C. It covers all types of insurance claims, including medical and property damage. D. It replaces standard auto and home insurance policies. Answer B. Explanation. Umbrella insurance provides additional liability coverage above and beyond the limits of other policies, such as auto or home insurance. It does not replace primary insurance policies, but supplements them. Option is incorrect because umbrella insurance is not basic coverage. It provides extra liability protection. Option C is incorrect because umbrella insurance covers only liability, not medical or property damage. Option D is incorrect because umbrella insurance supplements, not replaces, primary insurance policies. Question 27. Which of the following statements is true regarding replacement cost insurance coverage? A. It reimburses the policyholder based on the market value of the damaged property. B. It reimburses the policyholder based on the current cost of replacing the damaged property with a new item of similar kind and quality. C. It reimburses the policyholder based on the original cost of the property. D. It provides coverage only for the depreciation value of the property. Answer B. Explanation. Replacement cost insurance reimburses the policyholder for the cost of replacing damaged property with a new item of similar type and quality without accounting for depreciation. Option is incorrect because market value coverage is different from replacement cost coverage. Option C is incorrect because the reimbursement is based on replacement cost, not the original cost. Option D is incorrect because replacement cost insurance does not factor in depreciation, unlike actual cash value policies. Question 20. Which of the following is covered by a standard renter's insurance policy? A. Structural damage to the building caused by a fire. B. Medical payments for injuries to guests in the apartment. C. Loss of rent income for the landlord. D. Damage to the tenant's vehicle in a parking lot. Answer. B. Explanation. A standard renter's insurance policy typically includes coverage for medical payments to guests injured in the policyholder's apartment or rental unit. Option is incorrect because structural damage to the building is covered by the landlord's property insurance, not the renter's policy. Option C is incorrect because renter's insurance does not cover loss of rent income for the landlord. Option D is incorrect because vehicle damage is covered by auto insurance, not renter's insurance. Question 29, scenario-based. Kevin's home is insured with homeowner's insurance policy that includes $200,000 of dwelling coverage. He suffers fire that causes $150,000 in damage to the structure. If his policy has 10% deductible, how much will Kevin pay out of pocket for the repairs? A. $15,000. B. $20,000. C. $30,000. D. $50,000. Answer A. Explanation. The deductible is 10% of the dwelling coverage, so Kevin's deductible is 10% of $200,000 or $20,000. However, because the damage is only $150,000, Kevin will pay $15,000, 10% of $150,000 as the deductible. Option B is incorrect because $20,000 is the maximum deductible, but the damages were only $150,000. Option C is incorrect because $30,000 exceeds the deductible percentage. Option D is incorrect because $50,000 is not the correct deductible amount for this case. Question 30. What is the purpose of the coinsurance clause in property insurance policies? A. To limit the maximum payout by the insurer. B. To ensure the policyholder purchases a minimum amount of coverage. C. To determine the amount of deductible the policyholder must pay. D. To provide additional coverage for specialized risks like flooding. Answer. B. Explanation. The coinsurance clause requires the policyholder to maintain a minimum amount of coverage, often 80% of the property's replacement value, to avoid penalties in the event of claim. If the policyholder does not meet the minimum requirement, they may face reduced payouts. Option is incorrect because coinsurance relates to coverage levels, not the maximum payout. Option C is incorrect because coinsurance does not determine the deductible. Option D is incorrect because coinsurance does not provide coverage for specific risks like flooding.